Good evening, traders. I would like to confirm the audio. If you can, guys, type in the chat box if you can hear me. Okay, you guys also see my screen. Okay, so we're ready to start. This is FX RBS with Forex Simplified, and we're with the Monday class. We'll talk a little bit about support and resistance, supply and demand, and the Forex market, and also how we can use that with patterns trading. Okay, I'll open a chart so you guys would understand what I mean. This is right now euro-dollar 1 hour chart, and we can see that here the pair was in some consolidation, and in future this consolidation will act as support zone. Our consolidation can be below or above the market. Let's say that current price is here. This is, you can see that this is in beginning, like a couple weeks, a month ago. I'm showing this in the back of the chart so you guys can, we can play it out. This zone in future can act as support. And I know probably you use support only as a line, and some of you guys would say, okay, this here is a resistance, this here is support, then my next support is here. Well, I'd like you to think of those tight consolidation areas as support or resistance zone, or you will also find it called supply or demand zone, because those are areas where supply and demand will change and market price will most likely reverse. It is best when we can find a pattern inside zone like this. So what we do, we know is we're in an uptrend here, and I will place my fibs. I'll use expansion line. We have a trade 2 bounce, and here we see 86 converging with CD equals AB times 2 at 136.40, which is inside this support zone. Now I will move this circle here. Now this price, this convergence of the CD equals the AB times 2 and converging with the 86 is inside this zone. We have a bullish bat, and I will draw the bat so you guys will a little more obvious. Now we have a bat with a D inside this area or support zone. Since we have this support zone, the probability of the pattern is a lot higher, because we'll see in this area buying interest. People would want to buy the pair. They bought the pair here. It broke above this resistance support. It was, consolidation, I'm sorry. It broke consolidation. Most likely, since we're in an uptrend, if it comes back to retest this consolidation, it will move bullish again. And let's see, price is coming lower, comes inside this support zone, fills in the entry, and then price moves bullish. Now, I want you to guys start paying attention to small consolidations like this. Tight consolidation. Tight consolidation will act a lot as support and resistance in future. If you find pattern inside area like this, you have bigger chance of success. We can see in this particular example, target 1 and 2 have been filled. We always place target 1 and 2 before the A. So they both have been filled. By the time the market got here, we already have the stops at break even. Now, we don't care if price will continue bullish or will turn against us. Here, we were stopped out probably at break even. Now, what we'll do tonight is we'll go over different charts. Since we've been talking about patterns, we'll do some analysis, because I receive emails with a lot of questions about how I start my analysis, what I do, and I just want to go and show you guys what I do when I open my charts. Now, first thing is, I would look at the daily chart, and I'll see if price is somewhere near resistance or support. I will see that price is very close to this resistance. This is pound-dollar daily chart. A pound-dollar has been trading in a very small daily range in the last couple of weeks. It doesn't give too many pips, but never mind, I'll do analysis over the pound-dollar. So I see that I have resistance at 155.31, 155.30. So I know that we can see some bearish move once we get there. And I will go to my hour chart, my 1 hour chart, and was it 155.30? Yes, 155.31 to make sure. Now I know that here around this area I can start looking for bearish opportunities. If I find a pattern near this level, bearish pattern, I will be more than glad to short the market because I know that this resistance is coming from the daily. Now right now I can get either a butterfly or a crab. Since we are expecting a bearish move here, we would need to look for reversal pattern. What are the reversal patterns? We have a few. We have butterfly, we have crab, and we have head and shoulders. All those three patterns are reversal patterns. So what we need to do is look for a reversal pattern around 155.30. Now I can't see a butterfly or a crab right now. Price might give us such a pattern later, or we can wait for the market to form head and shoulders. We still can't see one, but this is the way I will start doing my analysis. I know the area where I would be looking for a short. If the price gives me any bearish patterns, I will take a short. If it doesn't, most likely price will continue in a bullish move. If price continues bullish and breaks this resistance, meaning that price breaking the resistance, most likely price will come back, retest the resistance becoming support, and maybe continue bullish to hit the big downtrend line that is coming from all the way from the top. We also have a resistance at 158.20. This resistance is coming from this low, this high, and it's very close to the trend line as well. So if price breaks above this 55.30 level, probably we'll be heading towards the 158. And what I would do is here, I'll mark 158. And I know that if price breaks above, I can trade bullish all the way to 158. And let's say price breaks, then it might give me a bullish pattern to trade bullish. I don't know yet, but this would be the way I will be searching for opportunities for trade setups. Now, what would I be targeting if price actually bounces off this level. Now, if we see a bearish pattern and price starts dropping off this 155.30 level, what we're going to be targeting is probably the nearest support level, which is at 148.80, 148.50 area, or this bullish trend line that we have, probably somewhere 150.50. Now 150.50 will be area where I'll look and watch for some reversals. If this doesn't stop the price, we'll continue on trading the pair bearish all the way down to support. So what we need to do is wait and see if price gives us a bearish pattern near 155.30. If it does, we enter and we trade bearish all the way down to that area that we decided on the daily. If price breaks above, we'll start trading it bullish. Now, let me show you another example of those supply and demand zones. Also, you can call them support and resistance zones. You guys can see this small consolidation that we have over a couple of days. They form that zone. We have a bullish pattern with a D inside the zone. It's 86 with 1618. Price barely got inside the zone. It's trying to bounce. I still have my entry here and I'm waiting for the price to drop lower. If price continues, I will miss the trade. But then later on I'll have another one. The thing is that right now I will be sticking to my plan, and when I see price moving away of me, I won't start chasing price, because what would happen if price decides to actually drop and go all the way down here? Now if I enter at this point right now, I will probably place my stop above the candlestick, and if price drops all the way down to my original entry, which is very possible, I will get stopped out. Then I'm not sure, based on my emotions, if I'll be able to get in. Now, if you guys have experience, probably you will be able to fight your emotions and buy again. On the other hand, if you have the experience, you won't be buying now. But I'm just showing you that we have bullish pattern, and the D is inside this support zone. So we're looking for a few things: direction, Now, if we know we're in a bullish trend, now based on the daily, I'm targeting this area, 109.02. We broke the previous resistance at 107.00. We came back, retesting this resistance, now acting as support. What we can expect is another bullish move to take us all the way up to 109. So we're trading bullish. We're looking for bullish patterns. And we'll be trading bullish until we see a good reason to trade bearish. Now, price have not taken any lows yet. If we see price taking previous lows, like maybe this one, then we can think, okay, price may be reversing and we can start trading bearish. But we are trading bullish now. And we'll be trading bullish all the way to, we said, somewhere around 100.90. And we'll be looking for a bullish patterns all the way to that area, because we know that if our technical analysis is correct, we'll be in a bullish trend all the way to 109. Since we're in a bullish trend, we're looking for bullish continuation patterns. The continuation patterns that we know are Bat and Gartley. Bat and Gartley are trend continuation patterns, meaning that we trade those patterns in the direction of the trend. So we'll be looking for Bats and Gartleys all the way up to 109 area. Once we get here, we'll watch to see if this level will hold. Since this is resistance area, we'll look for some butterflies or crab, because those patterns are reversal patterns. And we know that if price hits that level, I'll go back to the daily. If price hits 109, most likely is that we'll see some bounce. Now, even the smallest bounce on the daily is big move on the 1 hour chart. So even if we bounce and continue bullish, we can still capture some big pips on a 1 hour chart. And what we'll do is we'll look for bearish patterns to converge in this level. And we might see something like this developing soon. This is a bearish butterfly. We can trade this bearish butterfly, take some profits. If price continues to trade bearish, then we'll start looking for bearish Gartleys, because those patterns are now continuation patterns. Now we are in a downtrend and we'll be looking for continuation patterns. Bat, Gartley, patterns like this. Now, and the same thing, if we see just a bounce and then bullish continuation, once we move above this resistance, we can start trading it bullish again. if we see market price trading above that level, then we can continue trading bullish, because we know that, okay, yes, this was a strong level of resistance, this one here, 0900. It was strong level of resistance, but price broke that level and now is in a bullish trend. Until we see that actual break, we don't know if price will continue in trading bullish. So right now, all the way to 109, we'll be trading bullish patterns. At 109, we'll be looking for possible reversal patterns. And then if we bounce, we'll start looking for bearish patterns. If we don't, and if we break above, we'll continue on looking for bullish. Now this is USD Canadian daily chart, and we've been in this downtrend for a while. This is a down channel, and we're retesting the bottom side of the channel. We've retested it a few times. Those are daily candles, and we can see that price is consolidating very tight around the parity level. Now, since we're at the bottom of the channel, what is normal for us to think is that price will bounce and trade bullish to the top side of the channel. It doesn't mean that we'll do that, but this is what gives us the highest probability, because the normal thing for the price to do is, or if we can say the highest chance of what price can do, is that it will bounce off the bottom side, will go all the way to the top. So here we'll start looking for bullish patterns. And again, remember, if you can find a pattern at the bottom, this is your highest chance of success, because even if price bounces and it doesn't move much, now look, this is a daily candle. Even just a small, on the daily candle, this looks like a small, not even a bounce, it's 80 pips. It looks like nothing on the daily chart. What I'm saying is that even a small bounce on the daily can result in a big move on a small chart. And what we do is we try to find patterns in exactly those areas, or as close as we can to the bottom. Now, for example, probably would be nice if this was a 15-minute chart. So we know that we did bounce off the bottom side. What we'll be doing is we're looking for bullish patterns. Here we have 786 with 127. It didn't take us in. It was a Gartley. Price didn't come all the way to the entry. We missed it. But what we do is we're looking for bullish patterns. Anytime price gives us a bullish pattern, we can take it, because we know that since we bounced off the bottom, most likely is that price will continue on trading bullish. Now, we see this area of support, this black line, and how price is being retesting this black line over and over. If we see price come all the way down to the black line, what can we do? Is it a good place to buy? If we find a bullish pattern somewhere near this line, yes it is. Only based on this support area would I buy? Probably not. Now if I see a small butterfly to have a D, a buy D at this support line, I will buy it. Probably it's supposed to be a very small butterfly, but it can give me an entry at the support line. Also, we can use a candlestick, but I really prefer a pattern to give me an entry at a certain price. So we might find something like this to give us a bullish crap, and then we can buy that level. Let's continue. Oh, this chart looks probably very confusing, but I have a few patterns here. The first pattern that I had was this bullish head and shoulders with left shoulder, this blue circle, right shoulder. After we hit the right shoulder, we've been trading bullish. Price broke this resistance, broke the next resistance, came back, retested the resistance, becoming support. Now it's continuing the bullish move. What other pattern I have? This big swing, X, A, B, C, D. This is a very, very, very big bat with the sell D at 99 area, 99.20, 99.50. So all the way up to 99, I will be thinking bullish. This is my big target. On its way up, price can move in huge up and down moves. But bottom line is that right now, I believe price will come all the way up to 99 level. Now we're going to a smaller time frame. And this is an example of how well support and resistance works. Price moving bullish, breaking resistance, coming back, retesting, moving, continuing on the bullish move. Now, probably will come back, retest that resistance again. We have a bullish trend line coming. When we break this resistance, probably will come back, retest it again, continue the bullish move. Now here we can see also some bullish patterns. Let me delete this fib. I will draw a new one. It's best if I use my expansion line. The expansion line doesn't give me a good convergence. Right now I can't find it. Actually, this is a higher high, so I should be looking for patterns coming from this high. Well, in order for us to find a bullish pattern, we need to form a low so we can pull a sub fib going down, and just let's say hypothetically that this candle forms a low and we can pull the fib. Here we get this 86 with 1618 convergence for a bat. So pattern might look something like this. And again, you see this consolidation, this support zone, price is inside. It's given us high probability of the pattern. This is 1 hour chart. Based on the 1 hour, we can already find convergence at the 618 with 1618. And since we have possible, well, we don't have the low formed from the other time frame yet, but if we do, and if we have two different convergences, best thing for us to do is trade the 618 with 1618 with candlestick formation to confirm the bullish move. And once we have the candlestick formation, we can place the stop below the candlestick formation. Now this is good convergence of the 618 and 1618 with this resistance becoming support. Very, very nice convergence. High probability area. And it won't probably happen before midnight Eastern, so we'll be able to see if any of the new pivot lines are lining up with that level. Right now, today's pivots don't line up, but tomorrow probably we can get a convergence with pivot lines in it, and that will give us more confirmation. So what we do is we look for support and resistance areas. We try to find a pattern inside that area. If we find a pattern inside resistance area or support area, we can buy it or sell it. Now this is Aussie dollar daily chart. We've been trading from resistance to support and back and forth. The pair has been very, if I can say, uncomfortable for trading. This morning we had this convergence of the 786 with 127 with a downtrend line. Here is on 1 hour chart. So what we do is we pull a fib from the top to the bottom. Then once we form a B, we'll pull our fib from the bottom to the B. We'll look for the convergence. Note that we have a pivot line converging with the 786 and the 127, very close with the D. Also we have the resistance coming from the trend line. This gives us very high probability. Now if you guys have any questions, I will be more than happy to answer. If not, I will say thank you to all of you for joining me for tonight's session. I hope those Monday sessions are helpful for everyone. And I will see you guys next Monday. I will look over a few pairs in case some of you guys have any questions. This is Euro Yen 1 hour chart. We had a bearish head and shoulders at 126. there is also a possible bullish path all the way here near 127 area. Price is too far. We can see a lot of up and bearish and bullish moves until we get there. Once price comes close to 127, we'll be able to look for bearish patterns. If we see a bearish pattern converging with the 127, we'll be able to take the pair short. Now I will also pull a fib here, here. No, not a good fib convergence. This is pound yen. 4-hour chart. Price broke above resistance. Now we need to pay attention to this level. If that level holds, we'll be able to start trading the pair bullish. If the level doesn't hold, most likely we'll see a fast drop, probably all the way to the next support. The link to the next week will be posted on the website. Here, if you guys go to Monday free class, the link is not posted yet. Probably we'll have the link in a couple of days. We'll actually have all the links for the next month. So here is where you'll be able to find them. Go to forexsimplified.com, click on Monday free class, and here will be all the links. I will go over the questions. Did somebody had a question about the pound yen? Now this is strong resistance. Now this resistance is acting as support. Also, we have a trend line right here, but this is like a short-term trend line. It can be easily price can easily break that trend line and go bullish again. But what we're looking at is this resistance becoming support area, and if price breaks below, most likely we'll see a bearish move. If it holds, pound yen will continue trading bullish. Yes, also the MACD is getting ready to turn bearish. It is possible that we see it moving bearish, but I can't say that yet. I will say that if it breaks, it will probably move very fast if it does. Okay guys, thank you all for attending today's class. And I know if I answered earlier, but about the USD franc, I wouldn't buy the USD franc until it drops to my level. Yes, and I will also post the session if you guys are referring to this. I will post the session later today, so you'll be able to review today's webinar. And I will see you all next Monday. And if anyone has any questions, please ask me in the chat room. Thank you guys. Have a good night and safe trading.